Good morning, guys. Good morning. I hope you guys are having a great day. There's some things I'll cover. First, this is a chart of SPX. All right, S&P 500, the top 500 companies in the U.S. Uh, Sometimes just looking at the chart helps. All right, many of you guys, I realize, when on every green candle, you guys are trying to look for a bottom and what's happening, and I just sit there and laugh. Like, I'm not saying look down or go up. But sometimes just zoom out of the chart. I'm not gonna make any comments here. Just look at this chart once and ask yourself what's a more reasonable healthy thing that should happen here, right? And that most likely will happen. Some of you guys are only seeing every green candle. You want to go bullish and you want to call them the bottom on the market. It's crazy. I just don't know what to say anymore, right? But anyways, so far SPX is just holding below 4,400 now. Yesterday we had a nice little dip. So let's go on a 5-minute chart here, right? Something that I want to discuss with you guys. If you follow gamma levels closely right now, gamma levels, once again, I'll repeat myself, they're backed by options data. They're backed by data in the market, which is useful and is probably the truth in the market. They're not my levels or somebody's levels that like someone came up with. No, these are the levels that are backed by options data, all right, which is the truth. All right, data is the truth in this market, and that's pretty much it. And whatever the move happens, so when you guys look at these levels, now obviously I've inserted today's levels now, but they should be similar to yesterday. But 4,400 yesterday, they gave us this level. They told us in the gamma report that it's going to be a tough level. We might dance around it. In the morning, when I think we opened at this right here, 9:30, we had a huge rip. Right in the morning, we had a huge rip. All right, and the rip didn't really last well. What's basically happening is every time there's a big rally in the market, basically what's happening is people who are holding calls or the institution, market makers, whoever, I don't know, they're using these rips to sell their calls. All right, there's not enough call buying in the market for the last few weeks, or in fact the last 2-3 months. I would say since January there hasn't been enough call buying which people are holding on to. All right, so it means they don't see continuation. So on every rally they're selling their rip, right? So that's something that you need to understand. And some of you guys, when the rally happens, you guys get bullish at the top, you feel FOMO, you end up buying calls here. Well, not in our group of people outside maybe, and this is where they get stuck, and then they sell the rip, right? So you have to be careful when you're playing options and what you're seeing and buying overnight positions. Now another on the daily chart, if I look, nothing really happened yesterday. Overall the market was volatile both ways, 1% moves upside and downside, right? A huge scalping opportunity, right? If you look at any of these candles, less than half of them probably gave the next day's move, but they're not truthful. Like if you're holding overnight position, let's say for example you were bearish on this candle, like technically the market held the next day, and if you were bearish on this candle also, the market completely ripped, and if you got bullish on this candle, the market completely dipped, right? What happens here? Let's see. I understand many of you guys are looking for the morning start reversals and whatnot. I hope you're right if you're holding to overnight positions, unless you buy time of 5-6 weeks, right? I think that is reasonable, but overnight position on the weekly is nothing but a gamble. And today again we have a most important level, which happens to be the 4450. 4450 is the volatility trigger level. This is the most important level. If we get to this level, we hold above it, we base above it, and we're actually able to hold and then squeeze towards 4470, then yes, maybe we'll see some upside towards 4500 first and then 4600. All right, level to level. Okay, and then under 4450 is bearish, and 4400 is also very tough, right? Sometimes you don't have to trade every day. You can just sit there patiently. You can sit there patiently and let this 4400 zone play out. Does it play to the downside or the upside? If it plays to a downside, there's a lot of room to the downside. You can literally catch SPX at 4340 maybe when it breaks, and you have a 40-point move to 4300, and that's a big move if you catch on a scalp. So if you have a small account and you want good entries, playing here at 4400 is going to be very hard. On the daily chart, you can clearly see we're sitting at a strong resistance and support, right? You guys can see this zone. This is where market gets rejected or holds. So what happens here? I have no idea, right? In the market, I see some fast scalps, I take it and I exit. Simple as that. And if I hold on to a scalp, means my position is light. All right. So SPX 4450 is the most important level, and let's see what happens. And also keep in mind the implied volatility levels. All right, they help a lot. Okay, so today also we're expecting some volatility, and let's see what happens. Netflix has earnings, right? Netflix has earnings. Just want to go over this chart quickly. The chart has given up a lot. The chart always prices in the news way before they actually happen. Netflix came down from 700 all the way towards 337. It's cut down more than 50% in the how many months? In the last 5 months alone. Netflix is down almost 55%, 60%. How low does it go? I have no idea. But stocks sometimes cut down 70, 80, 90%. Even the greatest stocks that we think are going well, right? In 2019, it was trading at these levels. Is back to the same levels after 3 years. The question is, this is a very bearish bear flag. Can we hold? The one thing that Netflix has a tendency is when it rips, it has huge rips on big dips. I've seen this all my life. I've been following Netflix for a long time, right? And every time there are rips on these big dips. So can Netflix go towards 430 on earnings? Absolutely. That's a 100-point move. I've seen Netflix do that on earnings in the past. If the earnings are great and they surprise their numbers on the EPS, their revenue, and if their outlook is great, outlook is what's going to matter, I think, right? And then obviously depending on their productions, how everything COVID, how everything shaped up now, and then obviously around the world, their streaming subscribers, that will be really important. Are the subscribers going up or not? Netflix is at a very strong critical support. Personally, I would play Netflix with the upside here if I was to, but I would rather wait till earnings, because if it falls, the fall is also all the way towards 250. All right, from 337 to 250. So one of these zones might end up coming fast on Netflix. 252 downside. And then obviously we have 400 plus to upside. So on earnings, if you're going to play, the premiums will be jacked up a little bit. Obviously, it's the first earnings kickstart. I think the major earnings that I'm following. And then tomorrow we have Tesla, obviously. Personally, I'm not going to play Netflix here. I just want to see what's going to happen. For me, I'm just going to sit on the sidelines because options are expensive. It's not going to be worth. And if you're taking lotto trades, right? Many of you guys, oh, I'm going to take a lotto trade. It's okay if it goes to zero. If you don't have 25K in your account, I would say roughly, don't spend more than $100 on a lotto, right? This $100 on a 25K account is a big amount. And some of you guys are doing lottos on a $1,000 account with a $200 contract, right? You're not trading right. You'd rather go to the casino. You have much better chances playing on red and black alone. All right. So if you don't have 25K in your account minimum cash, you should not be playing lottos, in my opinion. Why even do lottos? Why not just sit there, wait for some legit trades? All right. So that's just something I wanted to share, because some of you, maybe you guys ask in the DM, and lotto trades, stay away. It's not worth doing it. I learned this the hard way. I used to do a lot of lotto trades, if you guys, 2 years ago. But then I slowly realized that, you know what, they're not worth doing it. My lotto trades on Verify, I used to hit 2,000%, 3,000%, but when I did the calculations overall, I mean, they were okay, right? I mean, they were good, but they were just not worth it overall. All right. And then Amazon, indecisive. I'm just going over the weekly candle here, plus this one, a daily from yesterday, right? Very indecisive. We're holding. I want to go over Apple. Now, Apple yesterday on this kind of candle, usually, it rips the second day. So let's see if we do get more upside. But if we do get this 167, 168 zone, I might take another short opportunity on Apple. All right. I might take another short opportunity at Apple at this level right here. 167 at the 50 MA basically. Okay, so 50 MA lines up right here. Either at 167, and if you want to play Apple to the downside, I would wait until it breaks a low, right? In between, it's going to be very iffy. Why? Because if you guys zoom out, we are at this zone. We are right here at the zone where it goes up or goes down, a support resistance zone. So I would wait until it gets to the 50 MA and then take a shot to the downside, most likely in my opinion. Or if it gives a low of yesterday, then obviously all the room is all the way towards here. On the daily, the first we have is the 200 MA. Playing in between, unless you're scalping, unless you got some fast fingers like many do in a group, then it's reasonable. Keep your stop losses tight. But an entry on Apple is either at the 50 MA to the short side, in my opinion, or break to the low to the short side, in my opinion. Personally, I will not play longs in market. That's just me. Maybe Apple rips, maybe Apple sees all-time highs. I have no idea. All right. Personally, I'm just playing strong resistances, and let's see what happens from there. All right. And then we have Google, another split name, a very weak action. This action says it all. right? We have earnings next week, and so far no earnings run, nothing. We have some days left. Let's see if we happen. But if these stocks take out these lows, if we take out these lows, this has a lot more room to the downside. All right, then expect these zones which might show up. All right, expect the unexpected. A lot of stocks already gave up 70-80%, right? The big tech is the only one that's holding, or these are the ones that are going to finally give up some gains in the coming months, right? Then we see what happens. However, another thing that you cannot ignore, I made a comment in Discord yesterday that we are at strong support levels. All right, so I also don't want to ignore that we can absolutely bounce from these levels also. All right, so both are open, but again, entries on these will require a lot of patience. I don't want to enter support given certain reasons, which don't support my thesis to the upside. But if Google breaks the downside here, I think there will be a ton of opportunity to catch some puts on it to a downside. And if it reverses up, let's see how far it goes and what earnings give. That's just my own thing. Be patient, right? Don't try to be a bull and a bear every other second. It's going to hurt you. You're just jumping from a position to position unless you're scalping fast and the strategy is actually working for you. Patience will pay you here in this market. We are at strong critical support, which can be held across the board. Or if those support levels get taken out, then there's a lot more downside to the downside. All right. And just manage well, go small position sizing. You don't have to go big. And I'll keep it short and brief, and we'll see you guys back in the chat, live on voice chat.